Okay, because I have no life, I'm sorry, it is true. I'm sorry for me, not that you guys would care that much, but I've got no life, and because of this, I've literally just listened to all of Meta's earnings calls since the start of 2021. So I went back 2021 and started listening to all of them. So that is 7 earnings calls, 7 hours of actually quite interesting conversation. Now, in this video, I want to analyze Meta stock, or as it's more well known, Facebook stock. It is down big over the past year and a bit, around 60%. That is some people might say it's a bit of a sale, but the question is Meta actually a sale, or is it perhaps a falling knife that you might cut your hand on? So let's analyze this business the Warren Buffett way. First, we understand it, we assess if it's a quality business, then we look at the financials and we try and put a value on it. I am more geared towards the value way of investing, so let's try put a true value of the stock on the stock. And then of course the last thing we need to do is check if we have good managers running our business. So let's get into it. Very first thing that I want to look at, which I generally don't do, is price. The price is down 60%, and I want to get into some of the reasons why, because these reasons are important to know as a business owner. That's the way Warren Buffett views the stock. He views owning the stock as owning the business. The main reason why the stock is down, at least from what I can see, is because the recent financials have performed very poorly. Net income is down, revenue is down, operating cash flow is down, free cash flow is down, and even cash in the balance sheet is down. And then the one thing that you do want to be down, debt, is not down, it is up. When you're meant to be a growth company and you start delivering the opposite of growth, investors hate that, especially the shorter term ones. But I will say that the longer term Buffett-like investors realize that the picture can be more complicated than just, okay, let's sell because profit is down. Businesses often go through fluctuations depending on market cycles, and if you can look at things objectively, there is often opportunities here. I don't know why I find this so interesting. It's a little bit of a weird trait of mine, but I love looking at businesses and seeing how do they actually make money? What services do they provide? What's the revenue split? How will this look in the future? I like doing this because 1, you get to understand the business more and you get to improve your investments. 2, because you learn more about the world and how the world is run. And 3, just on a personal note, I'm always thinking, what business can I start where there's a hole in the market and make money? Call me a greedy capitalist, call me what you want. Meta has effectively one source of revenue, and that comes from the way they segmentize it is in the family of apps. That's what they call it, which generates 99% of revenue. Their family of apps is Facebook, Instagram, and WhatsApp. Now, how do they make money on these? Isn't this free? Yes, it's free, but they make money through advertising. So users, people like me and you, use their app, and then businesses pay Facebook to advertise on their apps to their users. It's a pretty simple business model. People use their platform, then they watch ads. Here's a couple of examples of the types of ads you may see on Facebook. Now, unfortunately, they do not show the splits they make between Instagram ads and Facebook ads, which kind of annoys me, to be honest. I think that Zuckerberg does know this statistic, and I think it is very relevant for shareholders to know it as well. So I am a bit disappointed that they don't share it publicly. And so 99% of their revenue comes from the family of apps. Then they have the small 1% of revenue that comes from Reality Labs. Reality Labs revenue comes from their consumer hardware products such as Meta Quest, Meta Portal, and wearables related software and content. That's their business model. It's pretty simple. They do social media, they run ads on their social media, and they have this goal with the metaverse and the virtual reality world. Okay, let's look at users because this is very important. What's the user trends looking like on their platform? As of right now, Facebook have a total of 2.9 billion monthly active users on their social media sites. And I remember listening to their earnings calls, I believe they said in total across all platforms, they have 3.7 billion monthly active users. If you think about it, the world's population right now is 7.9 billion. That is half or more than half of people using Facebook platforms such as Facebook, Instagram, or WhatsApp. Jeez, that is a lot of people. Another thing we need to consider is growth. How much more can this actually grow? The growth of that number is, well, of course, it's maturing and plateauing, because at the end of the day, there does come a point when there's only so much that you can expand. So Instagram is growing quicker than Facebook, having now got 2 billion monthly active users, going up 10 times in 7 years. But that growth is slowing. With WhatsApp, they also have a similar number of monthly active users to Instagram. That number has now surpassed 2 billion. Mark Zuckerberg, of course, he's going to be very happy with that. I mean, he basically dominates the world in the social media space. Of course, we have TikTok, which is providing some decent competition now. They're taking some market share from Meta. And Zuckerberg, he did address this multiple times in different earnings calls. He said Instagram have responded to this threat with Reels. He said the Reels have been doing quite well. But, just looking at things overall, Meta is the company that just basically completely dominates social media. Okay, let's dig into their financials because it hasn't been pretty lately. Revenue and income, the 10-year picture is actually really good. Mark Zuckerberg made this company an absolute money generating machine. Revenue went from 1.9 billion in 2010 to 118 billion in 2021. Then income went from 600 million in 2010 to 39 billion in 2021. Like 2 years ago, everything was looking all fine and dandy. Investors are happy because their stock is making a lot of money. Then what happens, which eventually is always going to happen, 2022 hits, the macro environment changes. The Federal Reserve restricts its policies and companies, they start to suffer a bit. They're not used to just getting all of this money just basically when they want, as much as they want, kind of. So businesses are not making as much money as what they were before. So what's the first thing that they cut back on? 2 seconds to guess. The first thing is, of course, their advertising budget. But hang on, how does Meta make basically all of their money? Through advertising. And this is why their bottom line and their top line has begun to suffer. If we go into the latest quarterly figures, we can see that as soon as the first quarter of 2022 hits, their revenue goes down. And so does their income. We look at their cash reserve pile, and that starts getting depleted as well as they sink more money into the metaverse and into other projects. They go from having $64 million in the bank to 41 million. And then their debt goes from 12 million to 25 million. Investors start to worry. Hang on, is Zuckerberg just wasting our money on this fantasy metaverse project? All the while growth slows down on the main business? Is he really managing our stock, our business prudently? Guys, it's pretty obvious. We don't need to guess why the stock is down by 60%. However, good value investors never give in to the panic, and they realize that just because bad results have occurred in the short term, the long term is the most important picture. Let's now analyze the long term and the long term value of this company. Let's put a value on it. As per what I normally do, I will do a bear case, a bull case, and a normal case with our value. To do this analysis, I'm going to be using software that my brother and I are developing, which investors can use to calculate the value of stock. At some point, you will be able to use it yourself. Hopefully in the near term future, I'll let you know. Okay, so let's just do the normal case to start with. So Meta, as we can see, had a really good year in 2021. They generated $39 billion of income that year, net income, profit. However, as per the last 12 months, that number has dropped by quite a bit to 29 billion. So we're going to be using 29 billion as our starting figure for calculating this value. And with the time period of this analysis, I will do a 10-year analysis of the stock. I want to also get a 10% return each year on my stock. So my discount rate will be 10%. Oh, okay, now for the interesting part. Some might say the hard part, some may say the interesting part. I find it a bit of both, I guess, which is how much will earnings grow by over the next 10 years? One way of trying to work this out is by looking at how much earnings grew by in the prior 5 years, 10 years, and then we can extrapolate this history into the future. Does that make sense? So over the past 10 years, Meta's earnings grew by a crazy 69%, and over the past 5 years, it grew by also a crazy 28%. Meta has been an earnings growth machine. Now let's say in the future, 10 years, this slows down a decent amount. The economy isn't as great as it normally is, and companies do slow down as they mature. That's just what generally happens. They grow a lot to start, and then they mature. So we'll say that in the future, 10 years, earnings grow by an average of 10% each year. That's very conservative considering the prior 5 years was 28%. Let's be conservative. Now, the last ingredient that we need is the terminal value. So we can use one of 12, which is still quite conservative. Right now, their PE is 14. And now that gives us an intrinsic value of $560 billion for the entire company, or $210 a share. So if we compare that to the current price, Meta has a market cap right now, price-wise, of $397 billion, or a price per share, $151. As per the normal case, Meta is slightly undervalued right now. Their true value is above their price. This means that if these growth rates, these assumed growth rates are met, keyword if, we could see an above 10% return each year. But another thing that may happen is our bear case scenario comes true. So right now there's cash flow of $29 billion, and let's say that $29 billion does not grow at all over 10 years. The economy stays stagnant. Zuckerberg's metaverse investments don't pay off at all. Facebook loses more users to TikTok and to Twitter. If this happens and we get a lower terminal PE of 8, the company may only be worth $280 billion, or $100 a share. That would be if we get cash flows of around this amount each year. Personally, with investing, I don't see this happening, but we all know that investing does sometimes bring unexpected and negative things. Business, the economy, and the stock market does bring surprises, so who knows, maybe the bear case may come true. But also the bull case scenario could happen as well. Let's say that earnings go back to what they were in 2021. In 2021, they were $39 billion, mainly before all of these big metaverse investments and macroeconomic situations occurring. And now, let's say that growth rate is 15%. Still not as much as it was in the past, but still growing at a strong rate of clips. Let's assume that metaverse does better, Instagram and Facebook keep getting ad revenue market share from traditional media like TV, and the assumption is that users keep growing on their platforms. I think still with the bull case scenario, 15% growth is more than reasonable. And because growth is now higher, we can expect a higher PE ratio when we sell the stock in 10 years, because investors will look at the prior 10 years and say, whoa, it's grown by a lot. So we'll say that PE ratio is 14. In that case, in the bull case, right now, Meta is worth $1.1 trillion, or $411 a share. That is well above its current price, and would mean we get a very high return if we pay the current price to own the stock. So guys, those are 3 scenarios, but in general, as per the, let's say, normal scenario, Meta seems to be selling for a pretty reasonable price tag. The last bit of my analysis I just wanted to talk about is management for a bit. I've listened to 7 hours, actually more, of the prior earnings calls before making this video, and I'm now starting to get a feel for how competent Zuckerberg and his team are. And I think that management is often an underrated part of people's analysis, especially when it comes to tech companies, where it is so important that your managers are onto it and innovative and energetic, or their company can get disrupted in the click of a fingers. It's like if you're running a candy business, you probably don't need the most energetic, innovative managers, but with tech, you do. As far as I can tell, I think Meta's managers meet all 3 of Munger's requirements for managers: energy, integrity, and talent. And I wrote a tweet recently where I said, in terms of energy and talent, Zuckerberg's management team wins hands down against Google's. That's from my analysis and me listening to a lot of hours worth of earnings calls. If you disagree, tell me what you think. You know, Zuckerberg, he founded the company from the start, and he still has a lot of passion for the business and the growth of its future. He knows the industry that he's in back to front. He's still young, and as far as I can tell, he seems to have integrity, as far as I can tell. And guys, that is Meta stock. It is going to be very interesting to see how it does over the next 3, 5, 10 years. I personally do not mind the company at all. I may or may not be considering owning it or buying it. That would obviously be information that I would put in the Investing Academy, which is the premium group where you can see my portfolio, the buys, the sells, and intrinsic value calculations. You know, there's a lot of unknowns still with this company. The metaverse, how will they monetize WhatsApp, Instagram Reels, how's that going to perform? But they do have that really great base of a business model in their key social media platforms: Facebook, which users love and so many people use it, and Instagram, which, yeah, same thing. It dominates the world and users love it. I'm on Facebook and Instagram basically every day. I'm a little bit addicted, not gonna lie. And yeah, their base business, which generates, let's say, at least 90% of their revenue, probably more, is alive, doing well, doing great, kicking. Yeah, let's see how it performs from there.